If you know you have been struggling to be a day trader, you don't even know the right time frame to use for your analysis, you don't even know the particular trend to focus on when you are looking for your day trading setup, all you have to do for me today is to make sure you watch this lesson to the end, because I will explain the right time frame to use for your analysis, the particular trend you need to focus on when you are looking for your day trading setup. I will also explain the kind of POY we are looking out for when we are looking for our day trading setup, like a trend continuation POY, counter trend POY, and flip zone. I will help you to understand when to look out for counter trend POY and when to delete a counter trend POY, when to look out for trend continuation POY and when to delete a trend continuation POY, and also when to look out for a flip zone. Also in this lesson, I will help you to understand how the market behaves across different market conditions, like oversold trend and overbought trend. I will explain in today's lesson. Still on this lesson, I will explain the rules of this strategy. I will explain the rules of this strategy that you need to follow, which I know that if you follow these rules, there's a higher tendency that you'll be profitable. Still on this lesson, I will explain when to look out for this strategy and when not to look out for this strategy. Okay, I will also give you a proper risk management plan which you are to follow, and I know that if you follow this risk management plan, it is going to be very hard for you to lose your account if you are able to be disciplined. Okay, so if you are interested in this lesson, please make sure you like and subscribe to this channel. Make sure that the bell is on. Make sure that that bell is on so that each time I drop a new lesson, you will be notified. Because if you don't like and subscribe, there's a higher tendency YouTube will not notify you another time that I will drop a new lesson about this day trading strategy, because it doesn't only end here. In the next lesson, which I will prepare for risk management plan, in the next lesson I will record how I backtested this strategy from January 2025 down to September 2025. You will see how this strategy performed across different market conditions, like the number of times we were on winning streak, the number of times we were on losing streak. It is more interesting. You're also going to find out how many TP we hit in January, February, March, and the rest of the month. You're also going to find out the number of SL we hit across those different months. You're also going to find out the number of break even and also the number of days we had to wait for the market to return back to our zone. Okay, these are the things you're going to find out, and I know that that lesson will be highly interesting. So all you have to do for me is to make sure you like and subscribe. Make sure that the notification bell is on so that you always be notified each time I drop all this lesson. So for now, we have to start the lesson. If you're also interested to join our VIP class, use the number you are seeing on the screen and contact us on WhatsApp to get all the details you need to be part of the particular academy. Okay, so let's quickly start to understand every single thing about this SMC day trading strategy. So once again, you are welcome back to the channel, and then this is every single thing you need to know about this SMC day trading strategy. Okay, so the number one thing you need to know about this strategy is time frame. Is what? Time frame. So when you look at the screen, you're going to see that I have different indicators at different price levels. So you may be thinking that I was busy placing indicators at different price levels that played out, and then you feel that maybe I was just looking for perfection. No, I have a very good trading plan that I drafted, and I was busy following that trading plan to the end. I was not looking for perfection, I was only looking for consistency, and that was the reason why you see this result. Some of this trade I actually took it. Okay, but while I was backtesting this strategy from January 2025 down to September 2025, I discovered something about this strategy, and that is time frame. Time frame influenced this strategy a lot. In fact, if you don't know the right time frame to use for this strategy, there's a higher tendency you will end up doing analysis for a setup that will take longer time for the market to return back to it. You end up being a swing trader while thinking that you're a day trader. Okay, and I also find out that with you understanding the right time frame to use, you will end up risking little. You end up what? Risking little than risking massive, and you end up getting a setup that can easily hit TP that day or under 24 hours. Okay, so that is one thing you need to know about time frame with this strategy. Now let's come to talk about this time frame very well. Now when you are looking for a time frame to use for your day trading setup or for your strategy or whatever, now when you are looking for a time frame to use for your day trading, all you have to know is that you have to start with 1 hour time frame. You don't need daily time frame, you don't need 4 hour time frame, you don't need 2 hour time frame. You only need 1 hour time frame. With 1 hour time frame, you're only looking at what the 1 hour time frame trend is showing you. If the 1 hour time frame trend is selling, that means you need to sell. If it is buying, you need to buy. I mean, if it's an uptrend market, you need to buy. If it's in a downtrend market, you need to what? Sell. Let me show you an example. So let's say you went to 1 hour time frame and then you discover that the market is printing a series of highs like this, a new high, a new low, another new high that failed to take out the previous high. The next thing, the market sold massively to the downside. So this clearly means that the 1 hour time frame trend is bearish. Is what? Is bearish. So the moment you see this kind of thing, that means you are to be selling, you are not to be buying. Okay, that means you are not interested to take this buy, rather you are waiting for the buy to come up before you start selling again. Okay, so that's one thing to know about 1 hour time frame. That is where we find our bias. The meaning of this bias is you want to know where exactly this trend is pushing to. There's no need to go to 4 hour time frame, because sometimes if you go to 4 hour time frame, this can actually be a retracement and it will end and it will make you to start marking another extreme level, which you have to wait too long. So but one thing about this day trading is that all you have to do is to follow that 1 hour time frame trend. That is it. Then on a 30 minutes time frame, we are marking our point of interest. We are what? Marking our point of interest. You are not marking your point of interest on a 4 hour time frame or on a 1 hour time frame. No, the reason why you have to mark your point of interest on a 30 minutes time frame is that so that you will not risk massive. That's number one thing. So that what? You will not risk massive. When you look at this setup I have on the screen, all this setup I have on the screen, none of this setup I risk more than 50 pips. Even the one that I risk 50 pips, those ones I risk 50 pips hardly hit 1:4. That's why I said like and subscribe to this channel. Make sure that the bell is on, because I will still record the lesson where we are going to check out the most profitable risk to reward ratio, so that even if when you are trading this strategy, you can take that one that is highly profitable. So when I was backtesting this thing, I find out that if you risk 50 pips, there's a higher, as in there's a slim tendency that the market will give you 1:4. Even the 1:3, if it offers 1:3, the way it's going to reverse against you. So just for you to know that when you are risking massive, there's a higher tendency the market may not be able to hit your TP that very particular day, or under 24 hours you place that entry. Are you getting me now? So there's no need to risk more than 50 pips. Just 20, 25, 30 is enough. Even if you have to risk 50 pips, let it stop there. Don't risk 60, 70, 80. Don't try it, because the market would never hit your TP that very particular day. So on a 30 minutes time frame, we are marking our point of interest. So this is every single thing you need to know about time frame. So as I said earlier, on a time frame, number one is that we are using 1 hour time frame to understand our bias. Is it selling? If it's selling, we are selling with it. If it is buying, we are buying. Now let me repeat myself again. I mean, if you come to 1 hour time frame, the market is going up like this. Let's say the market is going up like this. Let's say the market is trending up like this. You can see the market is trending up like this. This means that the 1 hour time frame trend is bullish. I mean, maybe you go to 4 hour time frame, you may see something that look like this. Maybe the trend is in a bearish trend. Like you're going to see something that look like this, and then all these things can look like a correction. It can look like what? A correction of this leg. See, you are not interested in this thing. You have no business with this kind of thing. You are only following this trend. You're what? You're only following what? This trend. Because the moment you are interested in a particular level, there's a higher tendency you end up marking this level and you place your order. Number one thing that will happen is that you are going to risk massive, number one. Secondly, the market will not be able to hit your TP that day. And thirdly, you are no longer a day trader but a swing trader. You are only reacting with what you are seeing on the screen, which is please follow this trend. When this market gets here, it is also going to give you a reversal pattern. That's one thing about it. Okay, so now we have to talk about point of interest. So you all know that in this channel I've been dropping lessons on this point of interest. I've explained a lot about point of interest, but if you still don't understand that part very well, please make sure you watch that lesson I did last about how to mark a valid POI. So the three POI we're going to be using on a particular strategy is number one, a trend continuation POI, counter trend POI, and flip zone. So these are like the three of them: a trend continuation POI, counter trend POI, and flip zone. So when we talk about a trend continuation POI, it simply means a particular POI that follows the trend of the market, that helps us to follow what the trend of the market. Now let's say you come to the chart and you discover that the market is bullish, as we said earlier, price is buying like this. You are not interested in taking this sell. You are not interested in taking the sell. Rather, you are waiting for the market to come down to somewhere around this level, which is your trend continuation POI, so that you can keep buying. Okay, so that what you can keep buying. The moment the market break another high, you're also waiting for the market to return back somewhere around this level, so that you can keep buying. That is one thing about a trend continuation POI. When you are following a trend continuation POI, it means that you are following the current trend of the market. A trend continuation POI will no longer be valid until the market break below this level. The moment the market break below this level, it has signaled reversal. It has what? It has signaled reversal. It has given you change of character, and it's telling you that the bullish market or the uptrend market has switched from uptrend to what? To bearish. Okay, so that's one thing you need to know about trend continuation POI. Then when we come for this counter trend POI, this one is when you are going against the trend. I will just use that word. When you are what? Going against the trend. Now here is how it look like. So let's say you are selling. Let's say the market is doing something that look like this. The trend of the market is clearly bearish. Then all because the market sold massively like this to the downside, then you feel that this thing has been selling for a long period of time. Now this thing needs to go up. Before you take a counter trend POI, you need to make sure you see something that look like this: a new high, a new low that failed to take out the previous low, and then the market went up and break a new high. That means you have had a change of character. That means that what? You have had a change of character. Then you are waiting for a retracement like this. You're waiting for a retracement to continue to start buying, to start going against the trend. Because I will use that word, you are going against the trend. So this is a counter trend for you. It comes with sentiment. You are only because you have seen that this thing has been selling for a long period of time, and you feel that this is the right time for this thing to buy. Whenever you are buying, it means you are taking a counter trend. Okay, but you need to understand there are times you have to take a counter trend, and there are times you don't have to take a counter trend. You only have to take a counter trend when the market is at premium level, not at discount level. You only have to take a counter trend serious when it is at premium level, not at discount level. Now here is it. When this market is around this level, it's currently at premium level. It's currently somewhere around 23% or 31%. That is where I call premium level. Okay, so when you are taking the counter trend around those levels, there's a higher tendency you will be profitable with it. But when this market must have pulled all the way back to a discount level and you are looking for a counter trend, there's a higher tendency the market will stop you out. Something that look like this. So let's say when this market return back to this level, test a particular level, and then you are still marking somewhere around this level again to keep buying. Now you need to understand that this market has retraced back to a discount level of this high. Are you getting me? Now it has retraced back to a discount level of this particular what? Of this particular high. So you need to understand that looking for a counter trend around this level, there's a higher tendency the market will stop you out before moving in your direction. So you need to understand something. This counter trend, you can only take it when price is at premium level. When this thing has gotten to a discount level, the probability of this thing playing out will reduce. Now let's say you are trying to buy. Let me remove this thing and show you something else again. Let's say that you are trying to buy. The market has been making a move like this, a new high, a new low, something that look like this. Price has been respecting this level, and then all of a sudden we had a massive move to the upside like this. Then because you see this reversal pattern, because you see a change of character, then you are now trying to sell all the way down to this level. This is price at discount level. This is price at discount level. So let's say that price fell to pick you up. Let's say that price fell to pick your counter trend that you marked like this. Let's say you marked this counter trend and price fell to pick it up before dropping to this discount level. See, there's no need to keep this thing again. All you have to do is to go and delete it. Go and delete it first. Or even if you have to keep it, make sure that you wait for confirmation around that level before you enter, because price has already gotten to a discount level of the current trend of the market. You can only take it, or you can only keep it when this market must have break all this level. When this market has taken out this low, then it has told you that this market has switched from a bullish market to a bearish market. So that's one thing you need to know about counter trend. Only take it when it is at at discount levels, not when, only take it when it's at premium level, not when it is at discount levels. Okay, so now this is everything you need to know about counter trends. So when we talk about flip zone, what do we mean about flip zone and how does it work? So flip zone is very simple. It's just like a support turn resistance or resistance turn support. But wait, there's a way we mark this flip zone. There's a way we mark this flip zone. We don't mark it as break and retex. Now I would love to show you where these things happen on the chart, because I don't want to draw it. Let me show you where this thing happen on the chart. As I said earlier, it's just like a support turn resistance, a resistance turn support, because it may have something that look like this: a new high, a new low. This level is a support level. The market has broken the support level, so when this market comes back to it, it means a support turn resistance. This is going to be marked. Okay, something that look like this, but the truth of the matter here is that we are not just extending the previous support turning resistance. We are not just extending it, because whenever we do that, we end up risking massive. That's number one thing. We end up risking something that may not be able to hit TP under 24 hours of execution. So we are looking for a particular candle that the market used around that level to break this support level. We are looking for a particular candle the market used around that level to break this support level. Now this is like an advanced way of marking it, so that you will not risk massive, and so that you will stay away from spike, because there's something we call spike. That spike is when the market return back to previous support turning resistance. The market may want to spike above that zone like this. The market may want to spike above that zone like this, and you end up losing your money. And that is why you may see those support and resistance traders will be looking for confirmation before they go in. So that's why I said you have to look out for this candle that I'm about to mention. So the rules that follows this candle that you need to mark, including your trend continuation POY, your counter trend POY, and your flip zone, is: number one rule is you need to see a proper break of structure, or a support level or a resistance level. You need to see a low that was taken with a full body candle. If that low was not taken with a full body candle, it is not a valid BOS. It must break with a full body candle. If the level is taken with a wick, it is not a valid BOS. Now let me show you some places this thing happened on the chart. So as you can see, we have something that look like this. Let's look for somewhere. Okay, we have something that look around this level. So we have a particular internal structure break here. We can see we have an internal BOS around this level. We have an internal BOS around this level. Let me try to zoom out a little so that you can see that very well. So you can see we have an internal BOS around this level. This was a new high. This was, let me use this arrow too. So you can see we have a new high here, we have a new low, we have a new high, we have a new low. All of a sudden the market went up and break this particular level. This is like a reversal pattern. It's indicating that the trend has switched from a bearish market to a bullish market internally. So that's why you see that I was waiting for a retracement to start buying, and you can see it broke with a full body candle, not with a wick. Not with what? Not with a wick. Even somewhere around this level as well, you can see that the market broke below this support level. You can see the market broke below this support level, below this level. As you can see, the market broke below this level with a full body candle. This is what I call a full body candle. Are you getting me now? So when the market break below any level with a full body candle, it is called a proper break of structure. But when it happens with a wick like this, it is not a valid BOS. But when it happens with a wick like this, it is not a valid BOS. Instead, you have to wait for a series of full body candle to close above that wick so that you can mark that POI as a point of interest. Okay, so that is what you need to know about the number one rule. The second rule is that there must be unmitigated zone. So this unmitigated zone, I mean a price level where the market has not touched before. Each of these zones you are seeing, all these zones you are seeing on the chart, they were previously an unmitigated zone until when the markets come back to use it. Now let me explain. So let's say you have a new high like this, you have a new high, you have a new low. You see this somewhere around this level is an unmitigated zone. Is what? Is an unmitigated zone. The moment the market comes back and mitigates this level, this is now called a mitigated level, and it's no longer an unmitigated zone. Instead, somewhere around this level will now be an unmitigated level. Now this is the time we're going to proceed to mark the last candle that led to a break of structure around around this level, and then we take another sell from that level. This time around, it is now a mitigated level, and this level is now unmitigated level. Mitigated levels are no longer important to us. We are only looking for a level where the market has not touched before. Those levels the market has touched before has lost liquidity, and if you are still marking it and extending it, there's a higher tendency you are going to miss out on that trade, number one. There's a higher tendency you are going to risk massive, number two, and there's a higher tendency the market may not even, if the market return back to that zone, it may spike above that level before it move in your direction. So that's what you need to know about mitigated and unmitigated levels. So we take a trade from unmitigated level, which is the second rule. The third rule is that we must see a fair value gap. That part is the most important. In fact, if you have any point of interest on the chart that does not have any fair value gap, it is, as long as you are looking for this day trading strategy, don't take it. You must see a pricing efficiency around that level before you take that very particular buy or sell. So as you can see, a fair value gap, as I said earlier, is a space in between three candles. Is what? A space in between three candles. We can see we have a proper BOS here. We have a proper BOS around this level. And the next thing, can you spot the space in between three candles here? Let me use this arrow to look at the space in between three candles. Look at the first candle, look at the second candle, and look at the third candle, and this is the space in between three candles. So that is what we call a fair value gap. It must have a fair value gap. If there is no fair value gap, the POY is not valid. Let's look at for more places it happened. So as you can see, we have a candle here. I will soon explain this kind of candle. I will soon explain this kind of setup. So you can see we have a fair value gap around that level, and that's when the market return back to it. It's respected and then drop to the downside. So the market must have a fair value gap. I mean, the POY must have what? A fair value gap. So as you can see, we also have a fair value gap around this level, and that is the reason why you see we marked this POY. In the lesson where I will explain when to look out for this strategy, that is when you understand the reason why we did not take this setup. Okay, and then you can see this, there was also a fair value gap around this level. There was a fair value gap, just a space in between three candles. And last but not the least is that it must have an inducement level. There must be an inducement level. If there's no inducement level, the setup is not valid. So what is an inducement level? An inducement level is just the first retracement, the first failed retracement. The first failed retracement. There you have a new high like this. You have a new high. Let me try and delete this thing. You have a new high like this, then the market has broken a new low. So when this market tried to come up a little and then started selling, this is the first failed retracement, and it's going to serve as our inducement level. The moment the market returns back to this level is now our inducement level. Just understand it that way. It is our first failed retracement, okay, before the extreme POY. So that is it. So you can see we have a break of structure around this level. We have a valid BOS around here. You can see we have a valid break of structure around this zone. So as you can see, we have a valid break of structure around this level, and then we have an inducement level. This was our first failed retracement. I love to see more places this thing happen. So you can see this was our first failed retracement. Let me show you more of it as well, so that you can get used to it. So as you can see, we have a BOS that broke with a week before. The next in price went up and break above that level. So here is going to serve as our inducement level. So as you can see, let me show you more of it again. So as you can see, around this level we have a valid BOS around this level. We have a valid break of structure here, and then this is going to serve as our inducement level. So let me mark it. This is going to serve as our inducement level. This level will serve as our inducement level. So as I said earlier, it is the first failed retracement before your point of interest. So remember all these rules. It must have a valid BOS. It must have a break of, it must have a valid BOS. It must have an unmitigated zone. It must have a fair value gap, and finally inducement level. So we are back to understanding how a flip zone work, counter trend, and a trend continuation POY. So now let's understand how flip zone work with this strategy, and also counter trend POY and a trend continuation POY. You're going to see how this thing played out. Now let's start with flip zone. As I said earlier, flip zone happens to work this way. A particular support or resistance level need to fail. A particular support or a resistance level need to fail before you will now see that the same level turning to be another zone. Okay, now look at some, as I said earlier, you don't have to extend it. You don't have to extend that support turn resistance. You only have to look out for a candle that has all this confirmation. I said it must have a fair value gap, it must have an inducement level and unmitigated zone. Make sure that it actually break with a full body candle. Now look around this level. So there was a time, I believe there were some people that were trying to mark this level. They felt that this thing is a valid break of structure and this GDP JPY is about to buy. Now when this zone failed, if you are among them that was trying to take a buy from this level, because for you to see these black candles here, it means that there were some buyers around that level that attempted to buy before the market stopped them out. Now if you are among them that was around that level and this market hit you out, now understand something, that you don't have to be feeling bad each time this kind of thing happen again. All you have to do is turn around. Just switch from buying to selling, switch from selling to buying if you are trying to sell before. But if you are trying to buy, switch from buy to sell. If you are trying to sell, switch from sell to buy. Because when you turn around, you are going to see a particular candle around that level, which you can see we have this candle here. Look at this candle, look at this candle here. Above this level, there's no other candle that has those confirmations we are looking out for, except this one around this level. So as you can see, we have a fair value gap, we have a proper break of this support level, and we have an inducement level. You can see how I turned around and I switched from buying to what, to selling, and that was how this one played out. Let me show you more places this flip zone work very well. Okay, so you can see, and then I will still show you a counter trend POY. Even some places it failed, because I just want to show you everything. I don't want it to look like there's a particular one that is highly profitable than the other. All of these things are the same. Your own is to make sure you have a proper risk management and you follow this plan to the end. And let me show you one of the most craziest part. You see, this part is the more reason why you need to subscribe to this channel, and the more reason why you need to turn the notification bell on. Now this time was one of the most difficult time when I was backtesting this strategy, and even if I was the one giving you signals with this strategy, that time you will unfollow me, and later on you're still going to follow me back. That's number one thing. Okay, so this was one of the most longest losing streak of this strategy, which is not meant for, I will not explain that in this lesson. This was one of the most longest losing streak, as I'm telling you that this losing streak started since the previous month and entered the new month. Now when you look at this green, and when you look at this this particular line around this level, this is like a demarcation in between the ending of the month and the beginning of the new month. Okay, so this was July. This is where July ended, and this is where August started. I mean, this was when July ended, and this was when August started. But do you know that we had, just count the losses, 1 2 3 4 5. Imagine you had 3 losses in a row before the previous month ended, and the new month started. It became worse. 1 2 3 4. Now you still had 4 losses in a row. Now most of you will feel the reason why you had, because you are taking a set of, forget all those things, forget anything you want to tell me, just forget it, because I will still show you where this strategy running in 4 winning in a row, 5 winning in a row, as in 6 winning in a row. Still the same thing that we are doing that generated those winning those time was still what we did here that caused all these losses. So you just need to understand that is the more reason why you need to follow this channel, because I am so realistic. I don't have anything to hide for you. After all, you're not paying me. Okay, I am here to show you every single time. I'm not here to sugarcoat things to make it look like this one is, I will show you everything. Okay, so when you look at this thing, you can see, look at flip zone in action and see how many times it failed there, and I will show you also some months that this thing played out very, very well. Now see, when this market was dropping to the downside like this, when this market was dropping to the downside, we had a point of interest around this level. This part will be for the part I will explain about trend behavior, not in this lesson. Okay, so as you can see, when this market returned back to this level, the price sold a little, took us out. Then I said, each time the market hit your stop loss all you have to do is to turn around, not your break even. No, all you have to do is to turn around. When you turn around, you're going to see a particular point of interest around that level, which was this. So you can see this was the POY we had here that still have all those confirmation. If you check, there was a proper BOS here. There was a proper BOS, both internal and external. But when this market returned back to the little profit and it tag us out, then I equally say turn around. Okay, turn around, you're going to see another POY, and that was what we have around this level. It still have the fair value gap, the inducement level, and everything. It has that. And when the market returned back to it, tested it, gave us 1-to-1, the market hit our break even. In the next lesson, I will explain the kind of structure to look at for when you are training your stop loss to break even. Okay, after the market hit our break even, the mistake I did was I supposed to be using the flip zone rather than what? Rather than the trend continuation POY. So when this market returned back to the trend continuation POY, it offered just almost 2% and then tap into the flip zone area and bought massive. Now you can see if I have taken this flip zone area, I would have been on a profit. I would have recovered all these losses, but I did not, and this one failed. Now still me sticking with my strategy. After all this consolidation, I spotted a zone around this level. This is what I call a trend continuation POY. It has already told you that the market has switched from a bearish market to a bullish market. Now you have to keep buying. And this level is our inducement level. But do you know that that level that is our inducement level was the previous support turn resistance? Now let me show you. Before the market broke this level, let me try to extend this thing. Before the market broke this level, let's remove this thing. You can see what happened around this level. See what happened when the market returned back to this level. It broke it with not full body candle. Those that normally mark support and resistance always know that they need to see a full body candle close above any support or resistance level so that they will know that it is valid, not fake out. This one is fake out. After everything, price now went up massively. As you can see, price went up massively. Is it not the same thing? Is it not the same zone that is this? Is it not the same zone that is this? It's still the same zone. And because I've already known that there's something we call flip zone, that was the reason why I decided to take a trade around this level. The moment I see this inducement level, I knew that this level will hold. Added that the fact that this is a previous resistance level now turning to be what? Support. And if you check around that level, we have that very particular candle that led to this BOS, and then you can see the inducement level and the fair value gap as well, and it played out. 4% recovered all the losses we had in that month alone. Now the next winning as well recovered every single thing we have lost in the previous month. Are you getting me now? So look at this. So look at another winning we had around this level. Look at another winning again. We had this is like you taking a trend continuation POY, following the trend. As the market is buying, you are trying to buy. This happens to fall under the trend behavior, where you are going to understand when there's a huge displacement, how do I approach the market? That's the part I will explain, not in this lesson, because this lesson is already long. Okay, so let's find more places that flip zone and counter trend work. Okay, so look at this. Look at somewhere around this level again. So look at another flip zone in action. So look. So as you can see, we actually took a buy around this level. The market offered 4%. The market offered 4%, though this setup hit break even before it moved and hit our 4%. Now when this market was coming back, we had another setup around this level. Then when price tapping, it offered it did not even give much profit, and it went against us. Now when it went against us, very simple, turn around. You don't have to cry. You don't have to start pressing that buy again to recover that money. Don't try it, because you are going to cry. Now when you turn around, you are going to see that there's a particular candle around that level that has a fair value gap and all those details, and that was the reason why you see I took it and it played out. Is it not the flip zone working? Perfect. Are you getting me now? So you can see again, we had this particular level that failed, break a structure above it. Then I've known that this thing has switched from a bearish to bullish. The reason why you see me moving from sells to buy is because of the bias of this particular GDP JPY. Okay, so that was after the zone failed. The only zone that has all those details is somewhere around this level. It only have those things I normally look out for, which is a inducement level, fair value gap, and the rest of them. And you can see it played out. So let's find more places that this thing worked before we end this lesson. Now look at somewhere around this level. So let's take example of what happened here in form of let's explain So let's use what happened here as an example to explain a trend continuation POI and a counter trend. Now look at, we had a break of structure here. So when this market was returning back, I decided to start selling. Do you know why I was trying to sell? Because price is at discount level. But when price stopped me out, I don't have to feel bad. I have to turn around and then I find another POI around that level to start buying. Then after some few profit, after 1 to 3, the market now went and hit my break even. When the market hit my break even, I spotted another sell to start what? To start selling to the downside. One thing about this day trading is that you don't have to feel emotional when price hits your stop loss or break even or SL. You don't have to feel, you just have to you don't need to be strict. The moment you have find the buyers, if the market is at the peak, you are trying to sell to the downside and then that sell failed. Now you are going to see a zone to keep buying. You follow that zone what? To keep buying. Now when that zone to keep buying fails, you bring back that initial plan you wanted to sell because you're going to about this lesson. So this is every single thing about the particular point of interest part. So in the next lesson, I will talk about trend behaviors and how the market perform across different market conditions. But we're going to see more of this counter trend continuation POI because I took my time to explain how it looks like on a diagram. But in the next lesson, where we're going to be working with the trend very well, then I will show you more places. Okay, see when price got to a discount level, see why this thing failed. I will show you all those things on the chart and also how to manage your trade and the risk management part. Okay, so if you did understand something, please like and subscribe and share this lesson with your friend. Thank you and may God bless you.